Hi there, Serial Trader here. Well, it looks like we finally got the breakdown we're looking for. And looking at the hourly chart in SPX, we've broken out this channel, this ABC corrective price channel. And I'll point out, now obviously, we did an extremely deep retracement of this initial leg down from that important level at 29.5486. But we didn't actually retrace 100%. It was a very deep retracement, but that key level held. And I'll just show you doing the retracement. We went well beyond that 786 retracement. And okay, so the key level was at 29.5486. We went as high as 29.4582. So to within less than 10 points of that key level, and then we finally got the reversal. So that's why it's important not to give up on a pattern until it actually violates a rule. And obviously, if we're working this as initial 5 down for wave 1, a smaller degree wave 1, 3 up for wave 2. Wave 2 can retrace up to 100% of wave 1. And in this case, it came close to retracing 100%, but didn't actually quite go all the way. But obviously, if it goes past, then it can no longer be considered a wave 2, and you have to reevaluate the pattern. Something else is going on. In this case, though, the key level held. The pattern worked out. You got 5 down, 3 up. Now we're looking for the next 5 down. One thing to point out, which I find somewhat satisfying technically, so just doing the AC relationship here for this 3-wave advance that we appear to have just finished. So the AC equality relationship came in at 29.4803, and we went to 29.4582. So damn near perfect AC equality, and then a big reversal. Doesn't get much better than that as far as the pattern just doing what it's supposed to do. And I mean, that only happens when you correctly identify the pattern that's in play to begin with. If you're working the wrong pattern, it's going to prove you wrong. In this case, we were sniffing out the correct pattern, and so far it's proving us right. So that being said, definitely looking for lower prices here. Looking for a third wave of some degree to the downside. And if we do a larger 1, 2, 3, 4, 5 down, if it plays out like this, I'll consider that the initial A wave down of potentially that larger Y wave on the daily time frame or weekly time frame, the larger corrective pattern. But for now, let's just keep it on the short-term view. And short-term, we got 5 down, we got 3 up, and we're looking for the next 5 down. And we've broken the corrective price channel, so everything's looking good there. So not much more really to point out here on this chart. Basically, just let the pattern do its thing. Now, what was I going to... Okay, Thinkorswim some candlestick chart. That's what I want to look at. So not only do we get the nice Elliott wave resolution there, after doing 3 up, we've reversed. We also have a nice candlestick sell signal. So I always enjoy it when multiple technical disciplines kind of suggest the same thing. So in this case, obviously we're looking lower on the Elliott wave pattern. We also now have a strong candlestick sell signal engulfing 3 prior real bodies. So that's quite a potent daily bearish engulfing candle. We've closed below the daily T line and looking good. So definitely looking lower on SPX. Now, not much to go through here since it's only Tuesday, so I don't need to look at the weekly chart or anything. Go to the Dow Jones Industrial Average. We have a nice bearish engulfing candle on the Dow Jones as well, and a close below the T line, so that's a nice bearish sign on that index. And on the NASDAQ Composite, this NASDAQ Composite went beyond the 76 retracement of this initial move down from the all-time high to the March lows. But nonetheless, even on the NASDAQ Composite, as mighty as it may have been, we do have a nice daily bearish engulfing 2 candles, real bodies, 2 prior candles, real bodies. No close below the T-line, but that may come later as the NASDAQ became the most overextended of all the indices. And one thing I want to get into here is, you're saying, well, or some people are saying, okay, well, the NASDAQ's definitely a clear 5 waves up, so that means it can't go and take out the March low. Now, that's possible, but you also have to have an alternate scenario in place. So let me just prepare the NASDAQ wave chart there. Okay, so we'll head over and look at that NASDAQ composite chart. Just do a little Elliott wave practice on it. So I'm not going to label the initial decline because that's not what we're focusing on right now. We're focusing on the move off the bottom, whether it's a 5 wave impulse wave off the bottom like this. So is this what we're working? Do we have wave 1 up, 2 down, 3, 4, and is this somehow a 5? Okay, that's an interpretation you can try and run with. Now 1, 2, 3, 4 looks reasonable enough. You have non-overlapping action between 4 and 1. But now this wave 5, I mean, 1, 2, 3, we need a 4 or 5 to actually complete wave 5 in a 5 wave sequence. You can't finish wave 5 in 3 waves on an impulse pattern like this. So unless we just pull back here okay, so I'll show you what I'm talking about here. So within wave 5, you should have 5 smaller subdivisions. And let me drop the degree down, just one there. Okay. So currently, if we don't take out this level, which is 89.5726, so if we find support above 89.5726 and then make one more move up to a new high, this could be considered a clean enough 5 waves to finish off that wave 5. Okay, but that doesn't look like, well, it doesn't look like that's what's happening here. So let me just delete that. What it currently looks like is we have a 3 wave move to finish off of this pivot down here. So that just doesn't work. You can't do an ABC up to finish wave 5 in an impulse sequence. Now maybe in a diagonal or something we can work with that. But this is not a diagonal that we're trying to label here. We're trying to label this as an impulse wave. So that's not correct. So I'll propose something. Now, if we somehow, I mean, I doubt it, but if we somehow stop right here and go up one more time and make a new high, then okay, you can count a clean 5. Pretty hard to argue with that. But right now, this is what I would propose. And let's just break it down into smaller pieces. So I'd say you got an A, B, C, like this, okay? And let me just drop the degree down on this ABC. And I would say that is for a larger wave W. I think you got your little X wave, and this is going to be your Y wave. And then, of course, ABC up for Y. So if this count is, in fact, the correct count, and I'm not showing the X wave subdivision because you'd have to go in on something smaller than a daily chart to get it, but you'd be looking for some sort of ABC down for X as well there. But you get what I'm trying to show here. So 3 wave move up, interrupted by an X wave, and then another 3 wave move up for the wave Y to complete the larger double zigzag. Okay? This certainly works. It's a valid interpretation, and it would imply a move down to below the March lows, which I certainly wouldn't discount as being possible. It's definitely possible. I'll also just point out, I like to look for AC equality in a zigzag, so that's a really common relationship to look for. So if you look at this, we'll do our A versus C within Y, the relationships there. And equality, look at that. We didn't even quite get to equality, just shy of equality, and then we had a big reversal. So that's nice. And you can also see the parallel channel. So do the ABC trend channel. Again, right up to the top of the trend channel, ABC, boom, reversal down. Bearish engulfing, no less. So this kind of has me thinking this is not a 1, 2, 3, 4, 5 up for an initial bull market impulse wave up off the bottom. This has me leaning towards being a rather unusual but still valid WXY corrective pattern, and then we're going to go for another leg down and look to take out those March lows. A bold statement perhaps at this point, being that we're so high up off the bottom, but I think a valid statement nonetheless, and we'll just have to see how it plays out. Now, if I wasn't looking at the NASDAQ, if I was just looking at the Dow and the S&P, it looks far more reasonable for them to go down and test their lows because they haven't retraced nearly as much of this initial decline. But you know what? As we've just seen on a shorter time frame, and I'll go back to the SPX hourly chart, an extremely deep retracement is just that. It's a deep retracement. It doesn't mean you're going to make a new high. It just means you came close, and now you're turning back down again. So just keep that in mind. Despite the NASDAQ's unusual strength in the midst of very bearish conditions in reality, just because it had that unusual strength, for a month or 6 weeks or whatever it's been, that doesn't mean it'll continue. Okay, so I think I showed what I wanted to there, and if this is the right interpretation, then we'd be looking for obviously a significant move down in the NASDAQ along with the other indices that we're tracking here. But yeah, that's all I wanted to go through. Just the impulse wave versus corrective wave debate there on the NASDAQ. I think that debate is still very much alive, and we'll just have to see what the decline looks like from here on in. Anyway, bearish engulfing on the NASDAQ, engulfing 2 prior candles. Nice sell signal there, obviously. Basically off the 786 retracement, even though we violated it on a couple bars here. We really only closed outside that 786 retracement for one day, which was yesterday. So that's reasonable enough as long as that is the top and we go down from here. That's fine. Okay, VIX. Just want to go through VIX. Nice move up here on VIX. Looks like VIX might actually finally be starting something more substantial as far as trending up. We're back above the T-line on VIX. And, it'd be nice to take out some prior resistance levels. So the next important level on VIX to take out would be 40.32. But that could happen once VIX gets pumping here, it can happen real quick. So let's keep an eye on that. And on the VIX tool, we actually ended up getting quite a nice setup. So we had a lower low in VIX. We had the higher low in VVIX. So you had that nice VVIX-VIX divergence. VVIX is now cleanly above the red moving average. And SPX is now cleanly below the blue moving average. So a confirmed sell signal using this tool, along with the Elliott wave count, along with the candlestick sell signal. So things are looking quite good for more downside. And as far as my personal position, still holding the July 2500 SPX puts. And I actually did do a short futures position earlier today. Earlier on in the day before things really got rolling over there. My fill price on the ES futures was short at 29.30. My initial stop was just above 29.65, but at this point I've moved my stop to below break even there. And I'll show you what I mean if I head over to the ES chart. So I have my stop. Let's see, I'm short at 29.30, which is right up here. Here, let me blow this up. Short at 29.30, which is right up here. And I believe I put my stop to buy it back if it comes up at 29.20, which is, you'll still capture a 10-point gain, which is fine, but obviously we're looking for hundreds of points potentially at the downside. So now that we've broken trend and gotten down out of this channel, if we go up and touch 29.20, obviously something else is going on. So if this pattern is valid and we're just going to start tanking here nicely and start making lower lows and lower highs, 29.20 should not get violated. So that's where my stop is. Short at 29.30, stop at 29.20, locked in 10 points just in case things reverse here, but feeling pretty good about that. So let's see how low this market can go and how fast it can get there. And it's nice that we stuck with it. It's been challenging. I mean, we had this peak up here, a few weeks, basically a few weeks ago. And we've been just drifting sideways to slightly higher for seems like a while, definitely a few weeks. But we've definitely got our significant high there at 29.5486. We challenged it, unable to break it, made a lower high here, 29.4582, and now it looks like we're finally getting that reversal. Again, multiple technical sell triggers went off today, so let's see what we can get going here to the downside. All right, unless something worth mentioning happens during the week, I'll certainly check in again on the weekend. But again, I could update it anytime during the week if I see fit. All right, Serial Trader signing off.